it's very difficult when markets like this, when everything looks absolutely terrible, it's very easy to extrapolate the worst. But generally speaking, it feels that it's going to be shallower and shorter, because I don't think it's driven by the halving cycle any longer. I think this is driven by the macro. This is a pure macro event. And I think as Ethereum has become a more dominant ecosystem over this cycle, its own kind of triple halving, or whatever you want to call the ETH2 merge, is going to be another factor within this market. So I think the structure of the markets changes, and that's just the network maturity that we talked about before. It's just how things evolve over time. So I think the structure has changed. I think it's going to be shorter because we think the macro cycle is shorter. I think we all kind of agree that feels like that's where we are. So it's short and brutal, but it's not been as brutal as the past ones, because the past ones were crushing bear markets. Don't forget, this time in 2018, we talked about 2018 a lot in this chat, is at that stage, 2018, we were down huge. I can't remember what we were down in Bitcoin by the 2018 Fed pivot, but that was the low. It was what I was hoping to see, which is that the more mature the network gets, the less volatile the price becomes. So I was expecting, and yet to be proven out, that each time we go through a bear market, that we see lower percentage falls. So Amazon is, I use this as my best example of network adoption models. It came out of, it went public, it fell 96% in 2001. It then rallied back, it fell 65%, then it fell like 45%, and then the sell-offs were 30%, and then was even less. So that's because the network gets more mature as more and more people join it, so it becomes less volatile. So that should be true of Bitcoin and should be true of Ethereum. And I think that's playing out. So what ordinarily would have been maybe at this point down 70% has now been in a sloppy down 50% sideways range. Okay, that's a whole new thing we haven't seen before. So it's interesting. Now, it's yet to be proven out. Who knows what plays out. I look at the chart of Ethereum and I'm like, this could be a head and shoulders top, in which case we go significantly lower. We go back down to 1500. Who knows? Or what's more likely is, I think, is we're forming another sort of wedge, and that therefore 2000 is the low. I just, I don't know. These are volatile assets. But that the early adopted, so Solana should be what Ethereum was in the last cycle. How much was Ethereum down in the last cycle?
95%.
Well, it's going to be somewhere around that, right? And we've seen that play out, that kind of, Ethereum's been slightly different because it had so much adoption in this cycle. But generally speaking, they kind of look like each other at early stages, like the Amazon. So the early ones look like Amazon, and they become less like Amazon they become less volatile over time. So Bitcoin and ETH seem very similar these days in that kind of volatility structure. But, Solana, Terra, all of this needs to be proven out. Ethereum is over fair value because of the burning, which is a different source of demand that doesn't appear in the Metcalfe's law kind of models. I think that's interesting, and that has been why Ethereum has done very differently. Now, if that increases because of the triple halving effect, then that should further lead to the Bitcoin outperformance, the ETH outperformance of Bitcoin, which I've been watching for an extended period of time, and that seems to be ongoing. So barring any change in anything, it should outperform over time, unless something dramatically changes with volume structures. Now, we go back to earlier, what I said is, when I look at my analysis, Ethereum is going nowhere. We've got no new participants, and Bitcoin's going nowhere. But Ethereum has had luck because it's had NFTs, and they've burnt a shit ton of tokens. And that's been because Ethereum ecosystem is vibrant within it. It's just not growing, i.e. people are not coming into it. The Stimmy check was a new thing that we'd not really used before as a monetary tool. So the issue is with just printing money is it makes the rich rich, because the denominator falls and the value of the assets go up. So people who own assets make a fortune, and the people who don't own assets get poorer. So that's creating, this issue with polarization in the population, populism. But if you give it directly to people, politicians love it because you buy votes without having these pork barrel things that you get in the US, where, people get their fences fixed by the government because they refuse to sign a deal unless it's done. That goes away. You kind of bypass all of the political system and you give it directly to people. It actually helps people who need it. So it helps with the disparity between rich and poor. It is kind of a bit of the welfare state that, the US could never implement while most other countries have it. So it's a way of kind of doing that by the back door. So I don't see a world with which this does not get used. I've not sold a single thing, not done anything. I've started to average in on the really growthy tech stocks for the reasons we talked about. Yeah. Because into the carnage, if I'm right, and this is a super trend and a super cycle, then you want to be owning this stuff for the long run. Now, which companies are going to succeed or fail, we don't know. So you buy kind of baskets of stuff, much like you might do if you wanted to capture the movement in crypto. Crypto's the same, you've got to be, if you believe that network adoption continues, then this is when you should be buying. Right. But, it's just, not everybody has endless amounts of cash to keep putting in. that is the problem.
We wish we did.
Everybody is completely confused between what inflation is. Mm-hmm. The thing that crypto is all about is the debasement of fiat currency. That is the printing of money. The printing of money has proven not to be inflationary in Japan and Europe and the US. There's no correlation. Inflation is a different thing driven by the supply and demand of goods. It is not everywhere and everything a monetary phenomena that was taught to the monetarists back in the 1970s coming out of the Chicago school. It doesn't work because velocity of money doesn't pick up. So people have been the gold crowd, the same. It's like the inflation. Well, what did gold do? It didn't protect against that because gold actually protects against debasement of currency and not the inflation. Inflation, nothing protects you. So you don't have to hold on. So if your pain tolerance is, I could do something else with this money or just keep it in stables, do that too. That's okay. But I've just kind of thought, well, if I just write it off and just don't think about it, then I can just leave it there and I can add to it.